The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Wednesday edition. This is the 1st of August. And it's hard to believe 2 months of our summer is gone. We've got 1 month left here in the Boston area of actual summer. That is 1 month and about a week. And then it starts to cool down, it gets darker. But for the past 2 years, we've had a fabulous September and October. I actually played tennis right into October outdoors. So we'll see what happens. A great 2 hours of programming here at TFN has gone by already. Steve Rhodes kicks us off, then Tom and Steve together at 10 o'clock. I come on 11 o'clock till 12. Then Larry Pesavento, and so Larry's 12 to 1. Yeah, then 1 to 2, Daryl Martin, 2 to 3, Dave White, 3 to 4, Ken Shreve, and 4 to 6, Tom O'Brien wraps the whole thing up with a 2-hour presentation of where we are, where we've been, and where we're going, and just great programming here at TFNN. The Dow is right now up 30 at 13,038, and the S&P is up 256 at 1382.90. The comp index is unch at 2939. Gold is down 950 and silver at 1605. Silver's down 61 at 2737. Platinum's down 15 at 1400, and high grade copper is at 337. I tell you, that high grade copper, gotta watch it. Crude oil is at 88.71, up 65 cents, and bonds are down 10/30 seconds at 150.23. Most appropriate right now to go. We've had an end of the month. Let's go through the charts. I'm going to start off with the Qs because they just happen to be right here facing me. The Qs have been, that is the Power Shares QQQ Trust Series, have been in this fantastic up channel since they made a low of 25.05 back in November of 2008. For those of you who know my technique, the ChapmanWave methodology, it is a little unusual to see a peak G, less unusual than normal over the last 3-4 months, in that many stock charts have had Gs either in weekly charts or in even monthly charts. And they essentially look like a right arm extension. What does that mean? Another little character that you click on if you want to get someone's attention, with an IM and some message or something like that. That's it. You raise your arm, and that's exactly what's happened. And then what I look for, is there a failure from the previous peak, in this case the peak F-top in the repellent zone, that beautiful up channel. Remember, if you want to learn about channels, one of the techniques that I use is to use the channel itself going from particular high bars, higher highs, the full candle. Most of the time it's the full wick of the candle. And the low bars is the same thing, the low of the wick. And then I go with the most hit series of points. If they are on the upside, then I get the parallel line from the upside. If it's on the downside, I get the parallel line on the upside from those points on the downside, which are the most important. Now, what we've done is from the peak F-top at 138% gain in the Qs at 59.83 in July of 2011, goes sideways, holds the up channel, and then within it there's a technique that I developed over these many years, which I call the inside track. It's my CD introducing the ChapmanWave methodology. I talk about this, but what has been a change over the last, I'd say 6 months to a year, I now color in. And that's why I really like the black charts. I know people have asked me, keep using those white charts. I'll mix them up. What you can see here is that red line, which was the repellent zone, the start of the repellent zone to the green line, when the Qs extended from 49.93 and they continued higher past the previous high of 59.83, starting leg G/B. I don't want to get too much into that right now. Let's just call it the next leg up. And then it went to the 68.55 high, 68.51, 55 high of April of this year. it's been pulling back and holding the 9-period moving average, and then the last 2 months, it's got right into the buy zone. Buy zone hasn't done very much. In fact, what's happening is that the fast-moving average of the MACD, if you're looking at Tiger TV, you'll see just a beautiful line. You see that red line? That's the red line in the MACD, the moving average convergence divergence, is a support line. The yellow line is the slow moving average, and the fast line is about to cross. It hasn't done it yet. It looks like it's about to cross the fast moving average. If it decisively closes underneath and makes a wide beta, in other words, if the parameters between the fast moving average go sharply lower and the slow moving average, that will say not only have you got a sell signal, but you're probably going to get a sell mode at the end of August. Aha! We haven't got there yet. First couple of hours of the new month. So this is what I'm looking at. If the fast-moving average deflects higher, it means that the price is going higher. There's a chance we can make a double top at the 68.55 level. If at any week, this week, next week, or the following week, there's a close underneath 63, and right now it's at 64.84, I'd say be very careful, because the wick of the candle of June at 60.04 will become a target. So far, no sell. On the very short-term basis, there's a chance that we're in a sell signal in the monthly chart because it made a peak. You've pulled back very sharply. But I haven't got a confirmation yet. The stochastics at 76%. That is one part of the puzzle. I need for the fast-moving average on a monthly basis to close lower. Until that happens, you've got to use shorter-term charts. So big deal. We'll go to the Q's weekly chart. The Q's weekly chart has made a very quick peak A, peak B, peak C. And if there's a higher high above 65.31, that will say, aha, that's leg D. And in a very quick move in the ChapmanWave from A to B to C to D, you very often get quite a sharp pullback after that. It's not a major pullback, but a pretty sharp pullback. So here we are. Let's go again. Last week's low was 62.15. Close underneath 62.15 on the weekly. Not only does it say heads up for that weekly, monthly, but the weekly says be careful. You could make the dreaded H and retest the 60.04 level. Decisively break above 65.31, and that'll be very important because it says, yep, until you make peak D in the weekly chart, the test will be it'll be next week then. Either this week or next. The test will be 66.65. That's the very strong resistance in this little mini up channel. The daily needs to break above 65.31, double top, and then close above it because the MACD is expanding and the stochastic is still very good. This is one of the reasons why I've said to subscribers in my opening call. My opening call is a daily service. It has a really intensive look at the markets. I give the different parameters for the Qs, for the TLT, for the TBT, for the GLD, that's gold. Just so much, the dollar, the VIX, the TRIN. I mean, I spend a lot of time every single day on my charts, and one of the reasons I do it is because I feel that if you can encompass like a chessboard, if you can look at all the different plays instead of looking at one play to the next play to the next play, if you can get the big picture, that's really important. Wow, talking about big picture, I'm going to go through this in a moment. I've got a couple of questions here. One of the questions X-Men asked in the den is the transports. I'm going to get there. I have to say this. I wanted to say it on Monday, and I completely forgot. I forgot to look down at my page, which I always write my notes on. Chad Leclos, or Chad Leclos, a South African, beat Phelps last night. There must have been 13 seconds worth of information about Leclos, and all the rest was on Phelps. Now, I understand that. I mean, I understand the guy's going for, he's 19 gold. But a small country to produce, which they always do, South Africans have ever done. Since I was an athlete and we used to have Judge Jeffries and Gert Potgieter and those guys running and winning in the Olympic Games, always had Olympic runners, Olympic athletes. And I was a little disappointed. Just got a real short shrift. Beat Phelps by what? A fraction of a second. Big deal. The fact is he beat him. And he was not even in contention. Well, he was as he was coming into this part of the games. But I thought that was lousy. I admire Phelps. I think this is just an incredible feat. But I also admire this young South African who, under completely different circumstances, they do not have the kind of equipment and all the paraphernalia and everything that goes with it that countries with huge resources have. So I thought that was a great thing. And Bezadinot, I think his name was, also won a race, the South African, on Sunday evening. Hardly saw anything about it. So congratulations, Chad Leclos. I think you did a fantastic job. And then right here, local, next to my town, or my city of Newton, Massachusetts, a part of the greater Boston area, just 8 miles from Boston, south 6-7 miles. Ali, a raceman, did a fantastic job. I mean, these young gymnasts, they were fantastic. They came back. Steve often, his show is fabulous because he talks about inspiration, he talks about perspiration relative to inspiration, how you can put the things together, and they did it. And I thought that was fantastic. So let me see if my notes, I'm going to forget that because on Monday I was about to do it. I'm going to do it right now. Yeah, I've got the cues up, but I want to talk about corn. CORN is the Tukrium Corn Fund, making a potential peak D after the 51.37 high, but the weekly chart is still only in leg C, and the MACD is holding well. Corn, this is an ETF, looks to me unbelievable. Like it could go even higher. Yep, and I've got the same thing. I've got peak D in the daily of the CZ, the December corn contract. Of course, Larry Pesavento will go through all of these, I'm sure, in great detail tomorrow in his commodities hour if he doesn't do it today. I just wanted to mention it because I'm all about chart patterns, and I wanted to show how the different chart patterns function in the ChapmanWave. So it's really important when I get an opportunity to, let me just go to this is SQ12. And that was, and look at this. The soybeans made a peak E-top in the ChapmanWave, and they're pulling back quite sharply with the potential for a dreaded H. Still only leg C up in the weekly chart. Chart patterns is what I'm about, and I wanted to go through that. Now, let's just finish up with the Qs. So the Qs are very important. Why? Because they have a very a large percentage of apple. So in this particular apple pie, you've got Apple going to 616.14 above the declining trend line and then fading and coming back in. Now, what's really important is you've gone through a very quick ABC to the top side in the weekly chart, and it says that even if Apple was to go above 619.87, that 644 round number high should stick. And that what we're looking at here is an inside, and I was trying to explain this yesterday, within the ChapmanWave, if you get a very sharp move to the upside, a very quick pullback, and then support holds, and then it starts to move to the upside, you can get a very quick peak A, B, C, and even a D to the upside going towards the previous high, and then you've got to be very careful. So I'll be back, 877-927-6648. I'm going to go through a number of these different things, and we'll go to Mike in Lakewood.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Basil Chapman, I'm not sure if in my rant there I remembered to say that Ali is from Needham, Mass, right next door to Newton, Mass. And congratulations. Did a fantastic job. All right, so the Dow is up 22, the S&P's up $1.40, and of course at 215, we've got the Fed statement coming out. I'm going to try to put this package together in the last segment of the show with the bonds and the dollar and gold and silver. I'll try to do it beforehand, but we'll see because we've got callers. Now, right now, we've got Mike from Lakewood, California. Hi, Mike. How are you?
Oh, good. How about you?
I'm very well, thank you.
I'd like to talk to you about SanDisk. What do you think?
Do you have a position in SanDisk?
No, I don't. The other day I did short it, and I covered. I made a nice little profit, but it looks to me like it's peaking. I want to go short.
So when you say the other day after the gap away on the 30th?
Yeah, after the gap away.
So you shorted it and you covered it.
Right.
Okay, so I understand why we would cover it because having spiked that high, well, certainly for me that 200-period moving average at 41.16 very important, and it's above the SNDK SanDisk. For the life of me, I can't remember. It just drives, I think. What do they do?
They make a lot of flash memory.
Flash memory. Okay, good. Now, the monthly chart made a peak F at 53.60 way back. Isn't that interesting? And a low of 46 round number the same day. I have been doing some work on these round numbers, and the information that I'm coming up with is it's really quite something. It's eye-opening. And you can see that a SanDisk, once it made that peak F top in the ChapmanWave in the monthly chart back in January of 2011, it pulled back. It's made a rectangle formation, and that rectangle formation can last a lot longer than anyone's patience. We saw that. We've seen that. In even the E-minis are making the rectangle formation. Even Apple's making a rectangle formation. So what you have to think of is trading within the band. And the band says that 53.60 was the all-time high. 53.46 was the failure back in October of 2011. But it pounded against that and couldn't take it out, made a doji candle, and that's another important candle in March of this year, and then it pulled back sharply. Now it's gone back to the 9-period exponential moving average. So they are obviously, business-wise, continuing to do what they've done, but it looks to me that in the overall picture, we've got real clear parameters, because if SanDisk at any point in this coming month goes into the wick of last month's candle, that is between it opens at 36.60, closes at 41.30. So if it goes anywhere under 36, it seems to me that it's going to go really quickly down to the low 30s. So that's the warning on the downside. Now let's look at the upside, because the MACD and stochastic are doing really well in the weekly chart. And I made a pattern. I've got this one notated in my book. I'm almost sure I have. So I'm just going to put your B1, B2. For those of you who have been watching my work for years, I've been here, at TFN for about 8 years or something like that, maybe more. You'll notice how I've morphed my technique into many. So under the umbrella of the ChapmanWave, what we look at are different techniques, and you'll see that the highs of October, the week of October the 28th at 53.46, then again January of this year at 53.08, and then again at 51.80 in March, were met with resistance and with lower highs, and then all of a sudden you broke down underneath the support at about 45. You went down to a low of 30.99. So this makes it very interesting, and it makes it very interesting because it's in the computer peripheral area. It's in the high tech area that says that it wants to rally further, but it's not going to, unless the stochastic, which is at 61%, is able to climb into the 80% area in the weekly chart. Now the question is, what was the reason for the gap? Was that an earnings gap?
Yeah, that was an earnings gap. You can see the big volume spike.
Huge volume spike. So it says to me two things, that the 200-period exponential moving average of 41.16 is going to be very important. I'm leaning towards your side of the trend. You're looking towards shorting, correct?
That's correct.
And I would do the same. Now, let's go to the 120-minute chart. 120-minute chart, I'll make this real quick. Let's just put the up arrow, and we're going to go peak A, B, C, D, E. No, I'm going to stop right there because there's A, B, C, D. All right. So here we are. I've got it, and I've got a feeling I'm going to be able to give you some really clear parameters based on this 120-minute chart. Hold on, Mike. We're going to be right back. Got a bit of a break here. It gives me a chance for those of you in the den. You'll be able to watch me do it, and I'll do my notation on the 120. I'll give you the parameters to look for. Hold on. We'll be back. Basil Chapman, TFNN.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back, and the Dow is up 36, S&P's up 3, just kind of hanging around waiting for the Fed. Now let me just quickly say, when the market is in a trend, news, economic news, Fed news, European news, whatever it is, cannot change the trend unless the trend was about to change in any case. And I've said to subscribers that the next close, let's just, the exact parameter is not important, but let's just say a close 200 points higher than where we are now would be really important for the month of August. A close 200 points, that is cumulative. It doesn't have to be one day, but 200 points down in the Dow to about the 13,800, under 13,800 would imply something else for August. That's just making it real simple. Volatility index, which if it goes over 20, market will be pulling back. If it stays in the teens, it doesn't tell you how high the market should go, but it says buying pressure is there. Now we have online, this is very typical of what I've been looking at with my subscribers. We have long positions. They seem to be working quite nicely. We have short positions, a couple of core positions, they've been there for quite a while, that are working very nicely. I have not wanted to go into the long or the short side of the indexes themselves. I have a trade for subscribers. If at 3 o'clock or quarter to 3 today, the Dow is doing something, that could mean that we go into that position tomorrow. This economic news, or the Europeans do something, and it reverses completely. To me, the trend is going to be significant if there's 200 points up or down, cumulative from about where we are. That's number one. Number two is, Mike is on the line. Mike from Lakewood. We're looking at SNDK. Hi, Mike. We're back.
Yeah, I'm still here.
Sanders Core is just typical of what I'm looking at. It's a stock that's made its, at this point, it looks like a significant peak in the monthly chart. But it's pulled back to the 30s from the 50s. But that's not the issue. The issue is that it's having, at this point, you have to call it a counter-trend rally, which has been very strong up until now. The last 2 days, there's been a little bit of a hesitancy. There's been good news. Good economic news has been met with upside buying. That's what we've seen in some stocks. They've done really well since their monthly or quarterly reports. I want to treat those stocks and understand how they act and react after the announcement. In this case, the last time it was at the day of 19th of July, when it was at 35.53 high, closes at 35.08, it spikes up to the 38.51 low, 40.45 high, and then it pulls back for 1 day into the gap a little bit. Actually, that gap has to go all the way to there. And then goes to a new recovery high. I'm calling this an extension of the previous high, but this could be leg D, or it could be C, A, B, C. Could be C or F. I'm calling it F for now. This is the way I would look at it. You haven't got a position at this particular point. If you miss getting in right now, that's okay. But what I would say to you is, whatever the Fed does, regardless of what the market does, if SNDK slides and it goes underneath 40.92, the low of yesterday, I would just start a small position on the short side. That has to be today. If by the end,
I'm sorry, where would you put your stop?
And I would start a short position at 40.91, and my stop would be the high of today, which is 41 now. That's too much. I'd have about a 1 point stop. You can make the stop 41.97, 1 penny above the high so far, today's high. Okay. Why? Because if it breaks above today's high, there's a good chance it's going to retest the recent high. Now, that's just one small position, and I'd only do it if it pulls back, and that would imply that the market will be down maybe 50 to 60 points at 315 today. Let's look at the other side of the coin. The market spikes higher. If the market spikes higher, I would not keep this on my short list at this particular time. I'd let it play out, see if it rallies with the market. If it takes out 42.75, I have to rename that as new leg D, and then we will have a chance. And then what I would say to you is, you know what? You could even wait until Friday morning. Call me again. We'll look at it. That's the only condition that I was short it. The 120-minute chart says it could pull back, but it should hold above that 40. What was that? Did I say yesterday's low was 40.92? The worst case is 40.56 in this rectangle formation. But that's good, because if you short it, you'll already be 40 cents in the money if it's going to retest the low of the 30th at 40.56. If it takes 40.56 out, then of course it can go down low. It could even fill the gap. The way it's acting right now, I see upside potential. I'd only short it under those conditions, and a small position. It's more like a trial position to see if this is going to fail from this particular extension, that the rally was uncalled for. At this point, it's looking like from the weekly that it's looking quite good. And then I would say to you Friday, hey, I'm thinking that this is actually a long position if certain conditions hold. So
okay, thanks very much. I'm sorry. Thanks very much. I appreciate your analysis.
My pleasure. And 41.18 is the 200-period exponential moving average. You can even wiggle around that for about 3 days. Thank you so much for calling.
Have a good day.
I appreciate that. You too. Excuse me. So, folks, now let's go through this. The Dow. Actually, what I want to do is run through all the numbers. I'll do it real quickly. There's nothing really. It's just no great shakes here. Weekly chart, leg C in the Dow. Monthly chart, that long wick candle from last month, from July, says a close in August above 13,129. Let's call it 13,135. A close above that level says be careful. You could retest the previous high of 13,338. A close inside the wick of last month's candle, so anywhere underneath the 200, the 9-period, no, that's the 9-period moving average, a close below 12,750 says that wick will probably get tested down to 12,482. That's the way I'm looking. I'm trying to make it as simple as possible. At this particular point, I still feel it is market conditions that are telling me short the stocks that are on your radar that are showing weakness or are showing potential P, D, E, or F in the ChapmanWave. Stay long stocks that have been holding up through this entire trading range. And now on the candle side, let me just get rid of this here. Using my work on candles, candles say a close below yesterday's candle of 13,006, a close below 13,000, let's say, tells you the trend should be down at the 12,931 9-period exponential moving average is most likely. This is now on a very short-term basis. A close above 13,082, let's call it 13,085 on the Dow, says, aha, good action, could retest the high of the doji high of 13,128. Now let's go to the S&P. SPX.X. The S&P is a little bit different, but the pattern is in a sense the same because I've got an alternate wave count, just like the Dow. If the Dow takes out its previous high, just like the S&P, if the S&P takes out 1391.74, doesn't even have to close there. That is leg D. If the MACD and the stochastic and the Dow and the S&P are still holding in the 80s, they're at 85%. If by this time tomorrow afternoon, if by 3 o'clock Thursday afternoon, the Dow is still just hanging out in this range, somewhere around here, within 50 points up or down, the weekly charts will have a chance to see the MACD cross positive. So you can see that I'm cusping. I'm cusping here. Why? Because in the context of the TLT, that is bonds, bonds have actually held quite well. But the MACD and stochastic in the TLT are declining. There is a potential for a peak D, and it looks really strong, like there's a potential for a peak D top in the weekly chart in the TLT without closing above 132.21. At the same time, the Roman candle wick of the 27th with a low of 126.96 tells me by late this afternoon or tomorrow afternoon, if the TLT is trading anywhere, but it's at 128.73 right now. If it's trading a point lower at 127.88 or 73, there's a really good chance that bonds are going to fill the bottom of the wick. They're going to go all the way down to 126.96 because that's what I call ChapmanWave Roman candle. And that says two things. It says that the TBT could rally further. We actually are long the TBT. That's 200% long on the 200% short the TLT. But I've treated it only as a trade. We've got a pretty tight stop. We're in at 14.29. Don't usually like to talk about my positions, but I have to bring this up because that's the inverted Roman candle wick. If the TBT tomorrow at 3 o'clock in the afternoon, 3 to 4, is anywhere in the 15.02 area. The other day it spiked to 15.22. We had a fantastic trade. It was unbelievable. But then it pulled back sharply. That's what the TBT tends to do. That would say, be careful, because the TBT could retest the 15.22 and even make a new high to leg B up. What will that do? That'll say money could be coming out of bonds and going where? All of a sudden, we'll be looking at the Dow moving above 30,128. Why do I say that? Because my three bears, VIXI, Dolly, and Bondi, are saying the volatility index got repelled at the 200-period exponential moving average on the 24th of July 21. It's hanging around the 18s to the 17s. It's not anywhere near the 20.84 200-period exponential moving average. So far, that has to be considered a good sign. Bonds are pulling back, so let's see what the dollar's doing. Well, Dolly made a higher peak D. Folks, if you want to learn about a very simple technique, the ChapmanWave methodology, this is on the left is the daily chart, on the right is the weekly, on the far right, in the middle is the weekly, and on the right is the monthly. Look at this. You've got leg D up in the monthly. You've got leg D up in the weekly. You've got peak D in the daily at 84.10. And all I'm saying is, I'm watching this closely, because if the dollar breaks to the 82.10 or the 81.90 level in the next few days, let's call it by Thursday or Friday, I have to consider that there's a peak D in the weekly. That's going to take time, maybe just a sideways move, but it says, hey, made some kind of a top, you need a bit of a rest, and then we have to watch the monthly chart. So isn't that interesting? My three bears, Dolly, VIXI, and Bondi, are at this particular point pulling back, but by this afternoon or tomorrow afternoon, we could see a completely different picture. So what do I say? I say if the trend is in place, and in this case we look at the Dow, INDU, and we say, what is the trend? Well, the trend is still up so far because the candle is a little indecisive, this doji candle from 3 days ago. And the MACD is holding very strong, and the stochastics at 87.93%. So I have to believe that the last indication of a buy mode is still in place, and unless the Dow closes under 12,900, I have to consider that uptrend is in place. Now, it doesn't tell me how far you can go to the upside. It just says there's tremendous support as long as those three bears are acting the way they are acting. Now, I also want you to look at, I made a note, round numbers. This is unbelievable. I have a technique that I've developed. Actually, I've developed it intensely over the last 3 to 6 months, but it started way, way, way back. And that is using round numbers. Actually, that goes back to before the 1987 crash. I've already spoken a lot about that. I don't want to go through that again. Starbucks monthly chart made a peak F at $62 round number. It was a G in the weekly, and the daily chart, this is a hat-trick top, says Starbucks is not coming back to 62 for a long time. Hat-trick top, and it was a G. Unbelievable. I haven't had 3 Gs before. Let me put that down. SBUX 3 times G. Okay. What's really important about this is that it's the number of stocks. MA, MasterCard. MasterCard made a round number. Well, it opened at round number 455 back on the 1st of May. 466.98 was the high. But the most recent high was 448 round number. Today, trying to get there, it went to 446.75. I have to tell you, this is a technique and a half. I'll be right back. Basil Chapman, 877-927-6648.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi everyone, back again. This is Basil Chapman. Dow's up 39, S&P's up 3 3/4. I was asked about the IYT. That's the ETF, the iShares for the transportation index. Well, this is very interesting. In the ChapmanWave, it made a peak F top at 160. Was it at 181? 101.60 in July of 2011. Dropped sharply to 70.82, and that's if you use your own techniques. Just merely count each successively higher peak. You don't miss one. Don't miss that one from May of 2009 at 61.83 to 61.71. 1 penny. It doesn't matter whether it's the New York Stock Exchange is 8,000 something. 1 penny makes a difference. That's the technique. So from the low of March of 2009, 38.28, it went to 6 peaks higher to 101.60, and that was in July of 2011. Dropped sharply to 70.82, so that's a 30% decline. Has a rally back, but it's stalling after the peak A at 96.13. So for all I can say is it's in this rectangle formation. It's holding well. It's actually an arch formation, but holding as if it was on a platform. If the IYT in August is able to close above 94.28, let's call it 94.35, that would be positive and say, aha, good chance you're going to make a leg be up above 96.13. If it takes out, even if it just takes out this Roman candle, small one, of 87.76, the low of July of last month, it says there's a good chance it's going to test the down channel support, and that support would come in somewhere around 84.28. So there again, MACD and stochastic are very poor. I'm expecting that the IYT will pull back. So that's not a good sign. The weekly chart says it's making an H formation that turns into an M formation. Stochastic is deflected lower. Just be careful, because once again, here it is. Takes out 87.76 low. It'll retest very quickly the 86.09, and 84.22 is the 200-period exponential moving average. Now, I needed to just one thing I wanted to go through. VLO. I had a question from email about VLO, and this I thought was great to do a lot of work on VLO, because Valero has had a fabulous move up. Valero has gone from 70, the peak D, at 76.68 with a silent round number at a doji almost high, and then it pulls back to 13.94. Now it's in this rectangle formation, making a potential arch that turns into an M. So Valero Energy at 27.35 means, okay, now take a look at your weekly chart. Well, the weekly chart has this pattern, talking about my three bears, that's VIXI, Bondi, and Dolly. In this case, there's this pattern that I like to refer to. It's the Dolly pattern. And you've got a high of 31.12 back in April of 2011. It makes a cup formation, fails to get to 31.12, and it makes another smaller cup formation with a declining trend line. So if VLO is able in the next week to take out 28.88. That says great. Now there's an opportunity in the left side, right side price time match over the next coming weeks by the week of 21st of September to get towards the 31.12 level. How will it fail? It'll fail if the stochastic, which is at 88%, starts to break down as the price slides underneath 25. So the question was, is this a short? Is this a long? What is it? And all I said is, the pattern right now says on the daily, there's an exact left side price time match, which has until tomorrow, the 2nd, to get to 28.68. If it can do that, that's very positive. If it starts to fail and it breaks down and goes underneath 26, Valero will start to pull back. But I don't have any position right now. I have to wait for it to fill these requirements. Stay tuned for Larry Pesavento. It should be a wonderful show, as always, with Larry. I'll be back on Friday. My service is the opening call. Try it out. 2 weeks free. Very informative newsletter. And our positions have been working to the upside and downside.
Are you looking